So I spent about 15K in total to join 3 different crypto masterminds over the past 2 and 3 years. I'm still part of the all 3, and on 2 of them we catch up weekly. Those are quite active, but the third one is quite dead. There's really nothing happening there. No updates, nothing, no one is talking. And so in hindsight, that was quite a bad investment. I decided to make this quick video to share some of the key lessons I have learned being part of these masterminds and also being in crypto for 4 years now. And the reason I'm making this video is to help you to not make the same mistakes as I did, because if I would have realized many of these lessons earlier, I would have a way bigger crypto portfolio by now, probably in the multi-7 figures, to be honest. The second reason is that I might be building a networking group in the future, so I might leverage this YouTube channel for that. I don't know yet, we'll see. Anyways, let's get to the video. So I have my notes here on my phone, and we can start from the first lesson, and that is majority of the low risk and high reward plays can often be found outside the top 100 list. And this brings us to the point that why market caps matter. Like if you look at the top 100 list in CoinMarketCap, those are the largest projects by market cap. So let's say there's a project called X, it has 10 billion market cap, it's ranked 50 in the top 100 list. You could say it's going to 20 billion market cap or 30 billion market cap, so 2x or 3x. But the likelihood for that to happen is really low. It would require an insane amount of money to flow into that project to pull the 2x or 3x because of the market cap that's already so high. And in the other hand, the project could drop tenfold, so from 10 billion to 1 billion market cap. We've seen many projects drop from the top 100 lists multiple times. So the risk to reward in many of these top 100 list projects just isn't there, in my opinion. There's often a reason why these projects get to these top 100 lists, so they are considered as safe and quality projects, but that isn't always the case. So instead, what I like to do, and many of the guys in the mastermind, we like to focus on projects outside the top 100 list. So projects that are considered new or projects that haven't even been launched yet, because those kind of projects often offer a way better risk reward. Of course, it requires more time to research of these projects because there are a ton of new projects coming out every month, and also vast majority of the new projects won't be here after 5 years. Like 95% of them will fail. So it does require time and research. I think, and I know if you're willing to do the research and put some focus in, let's say 1 or 2 categories, I think you can really come across plenty of good projects that you can put your money into that offer way better risk reward compared to these top 100 list projects. And this leads us to the second lesson, which is you can get an edge by focusing only on one category only. And what I mean with this, that is, it's incredibly hard to make more money than the average investor in crypto. Because if you're following the law and not trading with any insider info, you're all working with the same information. However, if you spend your time focusing only on 1 or 2 the categories and spending years of holding your skills there and studying the market, you most likely will have a little bit more information than the average investor. And that dialed in focus also allows you to stay on top of your focus category. AKA, you can buy into quality projects much more earlier than many of the other investors because you know what's happening and where to look. And also you are able to judge new projects considerably fast, so whether they're good or bad investments. And that will show in your portfolio, or at least that's what I've noticed. I've also noticed that many people come into crypto, they often like to jump from category to category, often based on what's hot at that specific time of the year. But what this usually leads to is they're not getting that created value in projects in any of these categories. And value in projects is one of the most crucial skills you can have in crypto. And I've noticed that in the first year of my crypto journey, I burned like 40 to 50K, my hard-earned savings. Also, we know that crypto likes to go up and down quite a bit. It's quite volatile. But when you are dialed in your own crypto category that you have a lot of conviction on, that conviction really helps you to stay calm because you've done your research and you have an ultimate conviction on the projects that you're holding. So some swings here and there doesn't really affect you that much. And if you choose a really good crypto category, I think that's all you need to do incredibly well. So why bother complicating it and jumping on different categories or trying to focus on multiple categories? That's like trying to run multiple businesses at the same time, which is really hard. The third lesson I have learned is that crypto alone won't make you rich, but combined with high income can. And to drive this home, I'm gonna share a quick story. So when I started in crypto, my game plan was just to plow a few $1,000s in the few projects that will do 100x and I will be set for life. Because we all know that crypto is known for projects that do 10x, 100x or 1000x. So it's a place to get rich fast, right? But after spending shit ton of time in crypto, I have realized that that isn't the case most of the time. What I didn't realize until later is that finding those 100x plays or 1000x plays is incredibly hard, and therefore they're also really hard to repeat. Those kind of things tend to be one-off hits, and even if somehow you would catch a 100x player, you would probably take profits at 3x or 4x or 5x. I've realized that most of crypto is those boring gains, you could call. Of course, they are not boring if we compare them to traditional stock markets, but they're boring for many crypto people. But in order for those boring gains, so let's say you make 50% a year or 60% a year, which is still really good and really hard to repeat for multiple years, you do need quite a bit of money to plow into your portfolio to make any reasonable gains. I've noticed that the snowball really starts to compound, make impact on your life when you have a large portfolio. And in order to build that large portfolio, we need to have a high income coming in so we can plow multiple thousands in the projects that we have the most conviction. Being able to only invest a few $100s a month, it will take ages to build a large portfolio. And we obviously don't want to wait 40 to 50 years to become wealthy, right? I learned this specific lesson quite early in my crypto journey, but I really understood it when I joined this mastermind and spent time with these people that had large portfolios and were making a bunch of money in crypto. What I noticed that many of these guys and gals that had these large portfolios in the mastermind, many of them were doing quite well before they even got into crypto. So they had a high income job or online business that was doing well, which then allowed them to plow tens or hundreds of thousands of dollars into the projects they had the most conviction. And more importantly, stay really calm because crypto wasn't their primary source of income. And they kept doing that for multiple years, which then got the compounding machine run like crazy. Fourth lesson is that if there's blood in the streets, don't flinch, just buy. Time and time again, when the sentiment is the worst, these have proven to be in the best times to buy. And I think this is related to the saying that goes like, most of the money is made in bear markets, you just collect it in bull market. And this buy low and sell high sounds so simple, but yet we people don't do it. We get back to the markets when everything is green and pumping, everybody's in full of euphoria, and that isn't the time when we should be looking into what things to buy. And we can completely flip this thing as well. So if there is full euphoria in the market, like meme coins it with insane valuations, just like we saw in the last bull. Also, great indication is when popular YouTubers like Elliot Trades or Alex Becker are getting millions of views regardless of the video quality, or Coinbase ranking the top spots in the most downloaded apps in the App Store. If we see that kind of crazy euphoria, I think that's good time to take some profit. And I did a big mistake on that on the last cycle. I didn't take enough profits. But yeah, simple stuff, but fear and greed can do crazy things to the human mind. Fifth lesson, this is more specific one, but I learned this from Hasib from Dragonfly Capital, and it was quite interesting one, so I thought to share it. And this relates to finding the best crypto layer ones. So layer ones are like cities, like Ethereum for example. It is expensive, or the biggest brands, institutions, people are building on it. Everybody knows what's Ethereum. Ethereum is like New York City. And then there are other cities that are way less popular, expensive, like Polkadot. And what has worked well for us in choosing the best layer ones to invest in, because we are focused on crypto gaming and there are also a lot of layer ones in crypto gaming, is by looking at the data where the smartest people are building, because that will most likely be the place where the best applications will be on. And those applications are what brings users to the layer ones. And the layer one with the best applications and most users will most likely appreciate in price quite well. Then the sixth lesson, I don't have enough fingers because there's phone in my other hand, but that is networking. I underestimated the power of networking in crypto. Like I used to do just research and grind on projects by myself, but later I noticed that it's actually way more fun and easier with bunch of other people, and most often these other people already had answers to many of the obstacles that you were struggling with, especially if you managed to group up with people that were way ahead of you. And this is when, for example, I personally started to really make progress. This of course can also keep you accountable in your daily tasks, but yeah, if executed right and you can find the right group, you can literally become like a powerhouse together. And then the last lesson to end this video, and that is related to predicting coin prices. So predicting coin prices is a waste of time. And to drive this home, I'll share a quick story. So when I was starting out, I used to spend a lot of time trying technicals to the chart, reading tweets, watching YouTube videos of people trying to predict where the coin I was invested to could head in the future. But the reality is, no one really knows what the coin price could be in 2 years or 4 years. Not even the brightest economists in the world can predict the next quarter inflation rate. So how could anyone in Twitter or YouTube, including myself, predict the coin price of, let's say, a Shiba Inu in 2 years? The reality is no one knows. I think the best thing we can do is just to buy quality projects that we have conviction on. Some sometime hop into dollar cost average into them and hop in to verify that the projects are still delivering on their promises. And then in the meanwhile, we can go away and do something else to avoid ruining the compounding machine. But yeah, this is just my opinion. And of course, if you're trading, this might be a little bit different. I assume most of the people watching these videos are more long-term holders, just like myself. So I think spending too much time obsessing over coin prices of what they could be in the future, or trying technicals to charts, or spending time reading the news, it's not that productive. But yeah, hopefully you found this video valuable. And if so, consider subscribing or not, up to you. But yeah, let's go from here. Cheers.